Hey guys, you've joined us live on Moneycontrol and I'm Manisha Gupta. The spotlight today is on the sovereign gold bonds where the new tranche opens today and is open until 15th of September. Now, sovereign gold bonds until now have seen a lot of strength come in. If you look at the overall, the participation into this, that stands at a tall 100 tons by now, which has done better than the gold ETFs into the Indian markets as well. So if you buy the tranche that opens today, the pricing is at 5,923. And if you're buying online, then there's a 50 rupees of a discount at 5,873 there. The buying has been quite strong and the kind of returns that people have seen actually has motivated more and more participants into this going forward. As I said, it's open until 15th of September and 100 tons approximate as a number has been done already in sense of buying here. The markets, of course, have a lot of positives to watch out for. One, the bonds are sovereign guaranteed by Government of India. 2.5 interest rate per annum is what you also stand to gain into this one. You can buy as small as 1 gram at one point in time. And in a fiscal, there is as huge as 500 grams to nearly 4 kgs that an HUF and an individual can buy. The bonds have an 8 years of option of maturity and there's an option of redemption after 5 years as well. But let's get deeper into it, and to join into that conversation is Surendra Mehta. He's director at IBJA. Mr. Mehta, hi, thank you so much for joining us. Clearly, another tranche coming in and the enthusiasm into the markets is quite huge because of the kind of returns that we might see during the redemption in November itself. I'll come to that in a bit. But what's your sense on the buying and participation and the overall quantum that we stand on right now?
Manisha, sovereign gold bond has been one of the best investment I have ever seen as far as the gold is concerned. I'll just give you some of the figures. In 2015 November, the sovereign gold bond started and the first tranche was issued for 2,684 rupees and today it is 5,923 rupees. So it is whopping 220% return in 8 years time, apart from 2.5% interest per annum, which comes to for the 8 years, that is another 20%. So overall 240% return for those who have invested in 2015. So look at the history. The history says sovereign gold bonds will give you massive returns. They are the best buy. And just to give you the figures, till now, the government has already generated 110 tons of sovereign gold bond, out of which only 1.5 tons have been prematured redeemed by the public. And so balance about 108.5 tons is still in the sovereign gold bond. So I think this is one of the best investment, and you rightly pointed out that there are capital gain exemptions, there is interest and whatnot. It is guaranteed by the government of India. So this is one of the best investment I have ever seen.
Oh, absolutely. And if anybody on Moneycontrol is listening to those kind of numbers that you have earned in last 5, 6, 7, 8 years, clearly you're sitting on a very huge profit there. Also, Mr. Mehta, let's talk about the government part of it now. In November, there's redemptions coming in. The government will have to give out this 200% of return that people have earned into. How do you see the government standing on this one?
See, I tell you, we'll have to understand one thing. Sovereign gold bond is not backed by the physical gold. There is a sovereign guarantee of the government of India. So there is no underlying gold asset attached to the sovereign gold bond. So when the government launched this, the intention was the current account deficit. People who need not buy physical gold or who don't want physical gold can opt for sovereign gold bond. So in such a scenario, if you look at money outflow in Indian currency vis-a-vis the money saved in the foreign exchange, I think government is still a winner. And let me tell you, also look at the RBI numbers in last 3-4 years. We have seen their reserves, gold reserve has increased from 640 tons to almost 860 tons or so. So in a way, though these reserves are not directly linked to the sovereign gold bond, but government, I don't think, is a loser at any point of time as far as sovereign gold bond is concerned.
Mr. Mehta, while a lot of buying has happened in sovereign gold bonds, we haven't seen the Indian gold ETFs, being able to garner those kind of interest here. What do you think is lacking on that one?
See, as far as ETF is concerned, there is a cost attached to the ETF. There is no discount given in the ETF. But here you get a 50 rupees discount for the investment per gram. if you invest digitally. And ETFs are being managed by the companies which are in private domain, while sovereign gold bond is managed by government Reserve Bank of India, and there is a sovereign guarantee of the government of India. And if you look at both are mark to market redeemed. Sovereign gold bond is also listed on the exchange. Like ETF, also you can encash ETF at any point of time. So same is the case of sovereign gold bond. You can just sell off in the market and you can get your money within a day or two. So I don't see any big difference between sovereign gold bond and ETF. But when you look at the guarantee given by the government of India vis-a-vis a non-guaranteed product or of the private organization, I think sovereign gold bond comes out to be the clear winner.
Oh, absolutely. And the numbers show that too. So when you look at the SGB's previous tranche, we do know that the buying has been at record numbers. Do you see that being repeated with this tranche?
Yeah, just look at the numbers of the last SGB tranche. They collected whopping 7.76 tons in the last tranche. So I feel that the last tranche was issued at 5,926 rupees. So the price is almost same. I see a similar pattern for this coming for this issue of sovereign gold bond. I clearly see that government will be able to collect at least 6 to 8 tons in this tranche also. We have to understand that sovereign gold bond is the one of the additional finance product available for the people who have seen the corona, who have lost money in the equity market. So this is a perfect hedge against all other asset class, where you don't have to pay GST also. So basically you are saving in GST also. So I think government will be able to collect 6 to 8 tons this time also.
Mr. Mehta, it's a lot of heartburn for people who have not invested in sovereign gold bonds. I mean, it's okay if you didn't invest in 2015, but for people at the kind of prices that we've seen in 2019 and 20 and 21, the current prices are much higher from those kind of levels as well. Have these participants, consumers, missed the bus, or do you think the current times are as good to start investing?
Well, of course, they have missed the bus. There is no detail on that. Let me tell you, the government also understand. Because if you look at earlier year, there used to be a monthly tranche of sovereign gold bond, but now in the last 6 months we have only 2 tranches of sovereign gold bond. So government is also understanding that people are crazy about sovereign gold bond, so they have slightly limited this option, just 2 tranches in last 6 months. I personally feel that one should, as far as commodity market is concerned, one should look at the history. And if the history says that you have earned 220 to 240% return without paying any tax, I think this could be one of the best return I have ever seen. And one should not miss this buzz also. One should definitely invest in sovereign.
Okay, now this is the bus that's standing at your station. Do climb into it. Mr. Mehta, as always, thank you for that exceptionally great conversation that we always do tend to have with you. So that's about the sovereign gold bonds, 220% of gains if you invested in 2015. But now it's not late at all, and you have the subscription open until September 15th. So go in, get in and invest.